Man, I didn't see him come around, dude.
All right, good morning, everyone. We're going to kick it off here. All right, last night's sessions on the U.S. indices, bit of a drift across to the right, as you can see there. And we literally there was no volatility. Once we got open, we opened higher. We pretty much just slid out to the right for the entire day. Typical of the kind of market we've been seeing for a while again. We did have some earnings out yesterday with Citigroup, which came out and beat expectations, traded up a little bit on the back of that. A lot of people were worried about them. One of the big global investment banks and worried about the lack of trading activity. So the beat there, I think, gave the market a little bit of relief. We also had some M&A out on the day with URS soaring on the back of a buyout by AECOM Technologies, and Millen also announcing a purchase of Abbott Laboratories. So one of the things that's definitely noticeable, and it's, I guess, typical in terms of this part of the cycle in the bull market is all of the M&A activity. So there's a hell of a lot of companies buying up other companies, looking at that as the best way to grow the companies going forward, is simply just to make the acquisition. We also had Apple that gained after Barclays upgraded it from equal weight to overweight. So all in all, obviously got a bit of a higher market on the day, but just drifting out to the right. Nothing really giving it too much leadership. All right, in Asia, we saw a little bit of follow-on the back of that. We did have Shanghai and Australia, which lagged a touch. We had the BOJ, which left monetary policy unchanged, as expected. We had in Australia, we had New Zealand banking and Westpac that fell, and there was the financials that really led the market a little bit lower there. With some of the mining stocks were up a bit on the day, and then we had some of the export stocks in South Korea, which led the market higher with Kia and Samsung and those. But same sort of thing. Once again, we're just following on the back of what happened the day before. There's no conviction really one way or another. We're seeing mixed market action again, and we're really still waiting for leadership out of anything in the market at the moment. So we continue to play the waiting game. All right, cool chart here from Statistics SA showing the production of iron ore relative to platinum and gold, and you can just see there how iron ore production continues to move higher. And this is the whole thing with the worry over the iron ore price. The projections for the production of iron ore going out forward over the next 2 years continues to grow the entire time. The precious metals are continuing to fall, and interestingly enough, even the precious metal prices are falling. So the fact that iron ore production continues to go higher, obviously a bit of a worrying sign, but we'll see probably a nice tick up in this platinum group metals production on the back of the strike being over now. Right. If we look at corporate action, we got a hell of a lot of majors coming out today. First day where we've really seen a lot of big names, S&P 500 and Dow weightings come in on earnings, and that's J.P. Morgan. We've got Goldman Sachs, we've got Intel, we've got Yahoo, and then we've got Johnson & Johnson. So today could be the first day that the market's really properly driven from the earnings side. So we'll keep that out there. We'll start to run a tally on the beats and the misses on earnings in the States once we get a week or two into it. All right. On market data out today, we had Japanese machine tool orders, as well as Kuroda giving monetary policy statement, which is going on right now. We've got CPI out of the UK, retail price index in the UK, and RPI year on year in the UK, as well as PPI there. And Germany, we've got the ZEW survey expectations, and we've got it for the Eurozone as well. And then the States later, we've got Empire Manufacturing and retail sales. I'd say the biggest thing to keep an eye on today is going to be that those ZAW numbers. They've definitely been moving markets in the last 6 or 8 months. All right, let's get into the maps. Okay, the first thing that we'll have a look at is Arcelor. Look at Arcelor on that didn't work out. on a 2-year chart here. And you can really see we've put in a very significant level. In fact, you can run this level all the way back across as early as May of last year. You can see how we kind of head and shouldered with the shoulder line being at 32. This level has just held up incredibly well over the past year and a half. I say held up. It's not. I don't mean that it held up. I mean simply that it's been a key level that we've traded around. Okay, so you can see here on the 2-year chart, we're still waiting to break out a little bit. But if you take this down into the more recent activity on Arcelor, we punched up through and above this little descending triangle and this little narrowing wedge that we've seen going on here over the past several months. So I would really look and wait for maybe a final breakout above this level before you can really get excited about it, which is all the way up here around 33. You need to see it get north of, but bottom line is we've gotten above this 32 level, which is very key, as you can see, going back over 2 years worth of charts. We got above the 32 level. I think if we can get above 33, then we're really in the clear maybe to make a bit of a reversal here in Arcelor. All right, Woolies, also looking at this on a 2-year chart. In fact, let's just back up and look at it on a 5-year, and you can just see here how how we've just had this major consolidation that's really come in on the back of this consolidation on the back of a huge push higher. And now if you shorten this down and we go all the way to have a look at this here, we'll try to keep these lines drawn and intact. You can really see here how we've not only broke out to an intraday high yesterday, we made new closing highs, and we'd drawn this line before. I actually think that the better line here on Woolworths was down here. I think that's when we really broke up. So either way, I mean, we're looking at a massive target. You can't say that we haven't broken out now as of yesterday, and that's the key. That's why I really wanted to show it, because we have taken out all-time highs. I still think there's a good 15 Rand in this stock, probably at least 10 to 12 bucks of upside. Wouldn't be surprised to see this thing make it all the way to 100 in the near term, simply just because the technicals here. You guys just saw the longer term setup on a 5-year chart and how significant that is, as you can see right there. So the breakout that we have here is very telling, coming out of a consolidation that's been going on for well over a year's time up at these elevated levels, or were elevated relative to a couple years ago when it was trading down at 20 bucks. Still looks like we've got significant upside in Woolies. All right, let's have a look at Tongaat. This is a household favorite of our Pretoria branch. And you can see here we really popped up above the 55 level, kind of almost made a little bit of an inverse head and shoulder pattern right here, then broke above the neckline of the head and shoulder pattern, took us up. We've already reached the target from that head and shoulder, but you can see there when we broke out to new highs, we really spent a couple days just consolidating above that. Yesterday we got a huge move higher again. I think that we've reached the target here on this breakout. We take this from 145 to 155. We're looking for 165, so we haven't reached the target yet. There's still probably a couple bucks left in it, but bottom line is we've made a huge rally in this thing over the past couple months. I mean, it's incredible. Well done to the Pretoria guys. Well done, boys. Throw us a bone next time. And just keep in mind this thing's very, very overstretched, but technically still looking very, very bullish. All right, ShopRite. ShopRite, obviously huge bounce yesterday on the back of the trading update that came out, doing R1 billion of turnover here. We got beautifully above the 160 level, and there was a serious fight going on there at 160 for a while. I mean, I think they sold probably well over 500,000 shares there before they finally let it go. When they did, obviously ripped higher. We've punched up through the 200-day moving average. We came up close to testing this 165 level, and that's one of the things I wanted to show here. 165, ripping all the way. That's just terrible. Ripping all the way back to September That's 165 and 160 were two of our major levels that we traded around quite a lot. As you can see there, bottom there, kind of some consolidation around there, tops there, a lot of consolidation on the line, and then a lot of consolidation there before we broke down below 165. So 165 also significant for us, just like 160 was. And I think that's going to be the level to watch. If we can pop up above 165, we got more room to the upside. I also really like this chart on the fibs. How on the fibs you can see here we really kind of came down, tested, and really just put in this flat bottom consolidation here right on the 61% fib retracement levels. So I wouldn't be surprised if this thing does still have quite a bit more upside left in it. Actually wouldn't be surprised to see it come back and test the highs of this year. And bottom line is looking very bullish for ShopRite at the moment. All right, and then the last one we're going to look at here is BGA. BGA looks interesting because in looking at all the banks, they all kind of have this sort of flat top line consolidation level. We showed this one I think a day or two ago in BGA. We talked about if it can get above 65 on a closing basis, it could be off to the races. And this could end up looking like a big fail. Yesterday we popped up to as high as about 168 early in the session. We kind of traded back down. There was nothing really behind it after it popped up there on really light volume. And then we actually closed below 165. So these are the kind of things that can turn into failures. This thing could close at 168 today for all I know, but I'm just saying keep an eye on it. If we start to reverse down again over the next few sessions, that could end up being a big turning point there that we just had that failure yesterday in BGA. And that's it for today, guys. Trade well.